Hey, good morning. This is Mayor Valensky with Driving Markets. $100 billion was withdrawn from regional US banks for the second quarter to June 30th, 2023. This is in addition to the $472 billion that was withdrawn from the regional banks in the first quarter. This is the fifth consecutive quarter of falling deposits as far as US regional banks are concerned. And that is going to breed a crisis. A crisis is brewing because when Martin Gruenberg, head of the FDIC, Federal Deposit Insurance Corporation, states that the banks are resilient and everything is fine, it's not true. The banks are not fine. They may be resilient on the outside, but internally they are suffering significant losses, especially with more demands being put on them by the FDIC to remain liquid and provide protection in the event of going bankrupt. A lot of those banks are going to go bankrupt. What happened with First Republic, Signature, Silicon Valley Bank is only the start. There is a second regional banking crisis brewing, and that is going to impact financial markets. You can't avoid it simply because they've demonstrated that they don't have the financial strength to cope with rising interest rates and small businesses failing as far as deposits, as far as loans are concerned, and repaying and standing up to the debt that they have with the regional banks. So you can expect a further regional bank crisis, maybe towards the end of 2023, but into 2024. Obviously, there's going to be some sort of bailout because the FDIC, which is the insurance provider behind the banks, has no money. They themselves are short of funds because they never expected, on the premiums that they receive from the banks, they'd have to bail out the banks to the tunes of hundreds of billions. So the FDIC does not have the money. Where's that money going to come from? It's going to come from the Fed, the US Treasury, the US government, quantitative easing, printing, buying of bonds. Whatever the case may be, there's going to be a whole load of monetary activity in order to save the regional banks. They can't force tier one banks to buy the regional banks unless they're going to give them do the deal at a giveaway price, whereby all the toxic debt will be taken on as per usual by the US government, and only assets will be sold off to the top tier banks, because the top tier banks themselves don't have the availability of the cash, and that is going to impact significantly the whole banking sector. Other point to note is that Essex Property Trust ETF in the US was downgraded by Citibank because the rentals look like they've peaked. Now, I've been saying for a while that rentals have peaked. That doesn't mean they're going to come down immediately, but looks like the rise in rentals is now finished. It looks like they're going to now taper off, and we could see rentals fall in 2024, which would be great news as more inventory is being built and more inventory comes onto the market that will ease the massive strain on the rental and real estate sector. As regards other parts of the markets, equity markets bounced a little bit on Friday, but you can expect more volatility and obviously a slight downtrend. The bull trend has not been broken. However, you can expect near-term volatility and probably a short-term downturn in the US markets and in European markets. This is Mayor Valensky with Driving Markets. Share, subscribe, comment, buy my book on Amazon. Have a great day.